Okay, guys, I think let's get into Aussie Swiss franc. So Aussie Swiss franc really hasn't. We have been violating structure to the downside, but I guess I'm not happy about the way the market has been moving to the downside on Aussie Swiss franc. So I'm hoping that we do get a pullback, because remember we spoke about looking for a reduced risk entry on this pair. So if we do see this market actually pushing to the upside, I also did actually draw some larger time frame structure for you guys, just to put things into perspective. So we did find some type of, well, at least I found some type of an entry up there yesterday. So speaking about where the market is right now, we can see that we have this important support level. Why is it an important support level? Because this high here, this was the low that formed after this high and before this high actually got violated to the upside. Let me just zoom in so that we can see things a lot more clear. Okay, let's bring this down. So this low is the low, the lowest point that the market formed before we actually violated these previous highs to create a new high. So if we just look at the general structure of the market pushed up, came down, and then pushed up to there. So these are the most previous lows, obviously an important structural low. So I was looking at that for potential support, and we have some nice, at least a nice bounce from these areas here. Also, what I just want to point out, let me just delete that. What I want to point out is that I also have drawn this long-term structure, this larger structure over here that we can see there. So basically, the reason why I drew this larger time frame structure is because I want us to kind of have a slightly bigger view of what's going on. I want us to understand that this market still does have the potential to actually come and give us that touch of this larger structure before we see that impulsive move that we're waiting for to the downside. So having all of that in mind, we are still going to be looking at recent price action to be able to make our, or to at least come up with a tradable opportunity or make a trading decision. So guys, in terms of structure, I am looking at these structural areas here. Let's just actually delete this, or let's minimize or hide this.
It's Brighton in decision.
Brighton. Because you always say that dude's name wrong, hey? Okay, cool. Okay, so I'm looking at these structural levels up here. So obviously, if the market does show some sort of reaction from these levels here, maybe I might be willing to take a sell, because we might just get that move to the downside from here. But other than that, guys, the next area of interest for me are these highs up here. So I'm either going to be looking for a reaction for a sell from these levels here, or if the market does pull up into these areas here, that's where I'll be looking for the next selling opportunity. So I'm going to adjust my structure, obviously, depending on how prices do develop from now. I guess I can maybe move my resistance trend line for you guys and just show you what kind of structure I will have updated. So I will just extend this trend line over here. And then, oh, I thought I heard someone talking. And then obviously this bottom trend line, let's actually just delete this longer time frame trend line, just so it doesn't confuse us, and then just take into account most recent price action, account for the most recent touches. And now we see that we have a new third touch structure, or a new 3-touch structure, that we could be looking for some completion before the actual momentum to the downside. So let's just get this drawing tool. Possible scenarios are obviously maybe to see some sort of a reaction from there, maybe the third touch before we actually get that impulsive move to the downside, guys. So we're going to be open to price action. Let's look at what price action is doing. We might just see an inverse head and shoulders in these areas here. If we do see an inverse head and shoulders, that's going to be so beautiful, because now we know that there's a probability of price actually pushing to the upside to give us this higher probability sell from these areas up there. So that's what I'm looking at on Aussie Swiss franc. I'm going to go on to Aussie JPY. Aussie JPY got a very similar structure. I've already drawn this in. I think I did send a setup for you guys just now earlier on. So kind of a similar scenario here. Nice three-touch structure. So obviously our probabilities and all that nice good stuff are going to come into, at least are going to stack up in these areas here. So if we do see a third touch of this resistance trend line, this is where I'm going to be looking for that high probability sell setup. We also see that the market is trapped between an important resistance area and an important support area. So if we do break that area to the upside, and obviously break back within structure, then we can assume some sort of head and shoulder structure forming here. So if we missed the risk entry up here, then there will be opportunities to capitalize on a potential reduced risk entry after price actually breaks back below these previous resistance areas here. So no FOMO, guys. Let's just wait for the market to show us whatever it's going to show us. Yeah, very simple setup on AUDJPY, impulse correction, and we're looking to trade the next impulsive move to the downside. Last pair that I'm going to be looking at is CAD yen. So on CAD yen, this was my scalp from yesterday. I'm just going to zoom in here. So on CAD yen, guys, I was looking at this potential corrective structure here, but on the 15-minute, I also did go to 15-minute, guys. Every time frame gives information. Every time frame gives information. Higher time frames give information on what the lower time frames, where direction could be in the lower time frames. Lower time frames give information on where the higher time frames could be going. Like on a lower time frame, if you see a corrective structure or something after an impulse, then we know that maybe higher time frame, if we're sell biased on those higher time frames and we're seeing a corrective structure forming on the lower time frames, then maybe we can assume just a little bit more. We can assume with more confidence that market prices might be moving to the downside because now we're seeing corrective structures forming on lower time frames. Same thing here. I observed this important structural level, so I wasn't really looking to sell at the break of the structure, but I was looking for a retest of some horizontal support and resistance as well. That was what was going to add the confluence for me to actually take the sell from these areas here. Thankfully, we did not push and break and close below these support areas here. So what I am observing here is if we just account for a recent price action, let's just get a trend line. What we can see is that we do have some sort of a structure forming. I'm just going to just do this. So we do have some sort of a structure that is forming over here. So obviously, if we see prices break to the upside, then that's better for us because we're looking for a swinging opportunity. So if we do see prices breaking to the upside and retesting, then we know that we're going up higher, and the higher we go, the better the risk to reward ratio for us actually looking for the potential sell. So that's going to be nice if we do break to the upside. Otherwise, guys, we're going to be looking for some sort of a reaction for this market to actually deplete. If we do put our Fibonacci on here, from the high of this current impulse to the low of this impulse over here, what we can see is that the 0.618 aligns with, I was just trying to delete this, guys. I just want to hide that. Sorry. So what we can see, I think I'm just going to mute everyone. I can hear someone's mic is unmuted and it's quite distracting. So what we can see is that the 0.618 golden Fibonacci retracement level aligns with some structure that we see forming in there. So if we look to the left at this impulsive move, we do see a couple of green candles there. Obviously, if we see some green candles involved in an impulsive move and market continues to drop, it means that those green candles that were in there were used to just create some more liquidity for the continuation of the market to move to the downside. So we know that something happened there because we do see some green candles. So obviously, if the market does pull up into these areas here, market doesn't really need to come all the way to the upside, let's just say all the way to the upside to actually find some resistance. The market could just find resistance at these intermediate levels or in between if obviously there's enough supply in the markets. Markets don't have to push all the way to the upside. They can just come up to these areas here, obviously show us some sort of reversal structure, reversal structures can be complex. Let's not even just assume that it's going to be a simple one before we actually make that long-term move to the downside, guys. So let's allow some structure to play out here. I am still going to be sell biased on CAD yen. We spoke about the fact that everything is still bullish on those higher time frames, but if we look to the left on those higher time frames, price is still within a sell sensitive area, as we've seen a lot of bullish price action out of CAD yen. I just want to reset this so that we can see what's cooking here. We look to the left, guys, and we did break above these previous resistance areas. But if we look over here, guys, we saw that some sellers came in from these areas here. We see some resistance areas all formed over there. So this is somewhat of a sell sensitive area. So obviously, if I wanted to be a buyer at this point from this market, remember we spoke about this on Saturday, that if I wanted to be a buyer, I still couldn't buy from where the market is right now. If I wanted to be a buyer, I would have to wait for the market to pull down into these support structures and then buy. So even still, guys, there is no, you really can't be buying from highs. You need to wait for the market to drop. So even still, as much as we are bullish, as much as everything's pushing to the upside, it's still better to be a seller at this point, because there are reversal structures that are offering on the lower time frames that are showing us that price is slowing down. Yes, we are making that move to the upside, but look at how we are making the move to the upside. We've been correcting on the smaller channel that we see there, and that smaller channel is also, I think, a third touch. Yes, it's a third touch of a larger ascending structure. And a touch pushing to the upside. We're not pushing and violating structure impulsively. So for some reason, buyers are there. Buyers are still in this market, but obviously buyers are not able to push price and keep price above structural levels, because we are correcting to the upside. So the sell buyer structure to actually confirm something to me. Otherwise, guys, if we push to the upside, or if we do start showing some signs of rejection out of these levels here, I think I'm done. I'm almost done. Let's just mark this, because this is a line of this double top structure that formed here. So if we do see some nice rejections out of here, guys, then I might still be looking for that risk entry, or at least it's a reduced entry, because market has already impulsed in our direction and violated some previous structural lows. So guys, I'm going to be looking for some rejection either in these levels, or if we don't show any signs of slowing down here, remember we spoke about on the 15-minute that there's another level of structure within there, guys. So I am still sell bias here. Let's wait for the setup to actually just play out and give us a reason to enter.